and I'm here to break down gold and what it did this week, the key trades it's set up for me, and what I'll be watching going into the new week. So if you're new here, I break down gold structure every Sunday, so make sure you like, comment and subscribe. So I'm going to start on a higher time frame as always. Gold has clearly shifted bearish. We've gone from that strong push up into 5419 here, and we kind of know that that's now created a lower high because we couldn't go above there. It didn't go past the all-time high, which I think a lot of us were kind of thinking that it would, because obviously we did have price sort of going, it was trending up, but here was key, right? Couldn't push above 5419, and then since then we've been into a clean transition where structure started breaking down. So we're starting to see lower highs forming now and lower lows as price has broken some of these key areas. So I'm going to go down to the 4 hour. So you'll see I've got some trades that are marked up on here. Yeah, basically we are definitely in a bear market. It's very, very unusual for me to have, 4 trades in a week where, well, 3 out of 4 of the trades in the week were sells. Actually, this is going into last week. Let me go to the hour chart, right? Now, I'll talk about last week's one. I think I mentioned that in the previous video. We obviously had that sell on Friday. Now, when price was in this sort of range, I think I mentioned, and I've kept my pivot points on just because it shows price. I always say this, right? When we had gold reject, sort of this area here, and then it broke below here, we had price bottom out at 4996. Everything that happened after that has just been a pullback. Price was not able to close above 5250. I had an alert somewhere around here. I've deleted it now because it's not relevant. We were not able to close above there, so we went on this downtrend. Now, all of this kind of rangy movement is not really my ideal. As I think I might have mentioned, I took a buy somewhere around here. I was still pretty bullish, as I said last week, and it was here that we could see price was rejecting, and it definitely was not trying to go any higher. So that was like, yeah, enough for me to say, all right, the buys are not happening anymore, so let's move on. So that was the sell that I took last Friday. Anyway, we move on, and we've gone into the new week where we've had rangy movements. Now, there was some major news this week, which was, I believe, FOMC. Now, I'm actually going to delete that alert. It's not needed anymore. Yeah, so we had FOMC on Wednesday, somewhere around here. Our clocks are still not in sync, so this would normally be at 7 for us in the UK, but this was at around 6 when we had FOMC. Now, I'm not somebody that obsesses over news. I don't trade specifically because of news. I believe, from my sort of experience and my strategy, price action and market structure shows you what's going to happen. And, sometimes news will spike out of the kind of, it might spike you out if you're in the trade. But I mean, if you got in from before, you're usually going to be fine as long as you're following the trend. Now, prior to FOMC, now I've got sessions on. My sessions are highlighted in grey. This is like the New York kind of, this is New York session basically. Now, why I mentioned that is because the main reason why I missed this trade is because this happened outside of my trading window, and earlier on in the day there was obviously sell opportunity, but some people may have thought, oh, you know what, because it's FOMC, I'm going to wait. But you would have missed out on a decent move that happened prior to the New York session kind of coming to a close. And then usually what happens with FOMC, because it's so late in the day for us in the UK, it continues into Asian, which is what happened. Now, I was asleep here. I'd marked this up because I was expecting this move, but I don't know when I was expecting it, but I just had a feeling based on, the structure that I've seen here, and price broke out of this range. It broke below this range. We had a slight pullback and it sold off. I was asleep. So yeah, you win some, you lose some, you miss some, you gain them. It's just this is the game of trading, right? So I've left it on because it's an A plus setup for me. It just happened outside of my trading window, and as you can see, I tend to think, or tend to say, the move happens for gold, especially because gold is it's a USD, it's backed by the USD. So it's a pair that you should trade in a New York session, but essentially you had the biggest move of that day outside of outside of New York. Now, as I said, I've left that on because it's an A plus setup, and it just goes to show that sometimes your setup doesn't occur during your session, and maybe sometimes you might break your rule by taking the trade outside of your session. But if it matches up because you've seen what you like to see, where price does whatever it does for you to say, okay, this is my this is my edge, essentially, I'm going to take it. Now, I used to be very session specific, and I'm not so much anymore. But as I said, this move really happened at 3 a.m. I wasn't awake. I've had a lot of life and work commitments going on this last week. So yeah, I definitely was asleep like a baby. However, I will talk about this trade now. This buy, I'm going to call it a counter trend or a B setup, because essentially this is definitely going against the trend, right? Now, it also was a trade that I took outside of the US session, and I think, yes, in fact I did. I took it after market open, so obviously we have that hour pause when gold closes, but because we're still only 4 hours in the UK, 4 hours behind New York, this happened at 10 p.m. as opposed to 11, which it normally would be, a bit past my bedtime. But I was awake, I was on the charts, and I saw the opportunity. Now I'm going to scale down to the 15-minute chart, which will kind of help me to break down and explain why I took this trade. Now, I saw like a momentum shift on the lower time frame. Now, I noticed that obviously after that big move, we kind of broke. We didn't quite break 4,500. Now, maybe a lot of people would have been targeting that because it's a psychological area, 4,500. If you were targeting that, it's very likely that, well, not very likely, it didn't hit at that point anyway. And we went on a bit of a pullback. Now, I saw this kind of short-term recovery. I saw that we had a break above, the internal high. I saw that we had a pullback, and I thought, I'm going to get in and I'm going to go to sleep. Stop loss was a little bit wider than maybe normal, but just because I had to allow for, for a bit of movement, especially where I wouldn't be on the charts monitoring it, so that I could say, all right, if it's still, I get stopped out, maybe I might re-enter. So I just left it to do its thing. I had a short-term, internal target. Price obviously exceeded that, but for me, 4,700, 4,710, that was kind of what I was targeting. And that's because back here, looking back at the previous price, how it reacted around here, I just thought for me that was enough. And we obviously had price extend a little bit past there, pull back again, this is like during London now, to go above, and it didn't, and that created that equal kind of high here, which for me was the reason why I had then said, okay, I am going to set a sell limit. Now, it missed my sell limit only by, sometimes your broker will miss your sell limits, and it is what it is. I'm not going to chase it because that's where, sometimes tilt comes in. And I was quite happy or satisfied with that trade. I mean, in hindsight now, obviously I can see this was a very big move, and this was the move that I probably should have been patient for and waited. But I'd already taken that, so it is what it is. This, again, I've left it on because this is an A+. These were the A+, these two. This, not so much. But I learned some key lessons this week just from that trade alone. And really what that was about for me was sticking to the plan and not chasing missed entries. As I said, I missed the entry here, and kind of refining my system. So 2 A+ sells and 1 B+ or B setup that I did take. And to be honest with you, that's real trading, because not every week is going to be about execution. Sometimes it's just about being disciplined and observing. And as I said, I wasn't fully present at the charts. So I have lots of things going on outside. I have children, I have clients, I'm busy. So I did not have, I was not sat here, and my sell limit, I hope I said sell limit. I'm so used to saying buy, it's because of gold. But yeah, my sell limit didn't activate, and there really was no point in me chasing. There's definitely going to be, more moves. And going into next week, we can say structure is bearish still. So I'd still be focused on sales and key levels where price will pull back into. And if we continue forming lower highs, I'll be looking for continuation. And if we get a deeper pullback than that and start breaking above, those internal highs, then obviously I'll reassess. Now, there was something that I wanted to discuss where I mentioned about my checklist last week. And obviously this B setup, I was looking at thinking, this is not on my checklist. Now, this is something that, if I'm trying to be rigid and sticking to, no, I am being rigid. I'm sticking to my plan. Sometimes I don't want to say deviate from the plan, but there are definitely the A plus setups and there are B setups. Now, sometimes B setups work out, sometimes they don't. So for me to be able to check if they are going to work out for me, I need to have something to refer to. So if I go back to my checklist, which I think I mentioned last week, I've got the A setup, A plus setup, which you know of. And I'll be honest, that trade that I took, the buy, didn't meet any of these. So technically my checklist will tell me this isn't a trade. Now I've created another tab here where I obviously can tick these off because the higher time frame move at that point had completed. We were no longer mid-trend. We started to have a lower time frame breaks, and then there was a higher low that was confirmed. I got in the entry on the pullback, and my target was internal, and the risk was reduced. So that satisfied my entry criteria. So there is that. Secondly, I have a position calculator. Now, there's a calculator that I use, and it was down this week, and I thought to myself, this is not reliable. So I've created my own. This is a more kind of basic version of the calculator. Now, if you trade in USD, or if you trade in, any other currency, it's connected to, you get a live quote from the Central European Bank. And you can put in anything here. So obviously, let's just say we have a funded account and it's 100k. My entry, if I go back to that buy, it was somewhere around here. So let's say 464344. Stop loss was here, 4625, correct? And the target was 4710. Risk was, let's just say, you want to say 1%. It's given you the lot size that you should use. Now, if you were to say you were going down, you had a 10k account, obviously, it reduces your lot size. If you had a £1,000 account, it will tell you that your balance is too small for 1% risk. Now, I'm going to say something here that people might not agree with, but funded accounts are not the full amount that you're essentially purchasing. If you had a 100k funded account, essentially that account is worth 10k because it will take you, the account would be blown if you went below 10k. Now, essentially, what that says to me is that each trade that you're taking is approximately a 10% risk. Now, if you were comfortable enough to risk 10% on the £1,000 account, here you are. Your risk is roughly £94 for that trade, and your profit would be 350. Now, some people might say, oh no, that's too risky. No, but I'm just saying that's how, when I'm trading my personal accounts, that's how I tend to treat them. The risk isn't necessarily 1%, especially if you've got a balance of around 1k. Now, I will just drag the screen down slightly so I can show you the advanced version of this calculator. It's just a little bit more detailed. You don't have to use, you've got other currency pairs here, even silver. You've got the option to use a fixed risk of the a you know a financial risk here. So you could say, all right, 500 rather than the percentage risk. So that's the money risk. So you've got GBP here. You can change it again. Obviously, as I mentioned, it's connected to, it will give you live current prices. I feel like I'm waffling today, guys, sorry. You can select sell or buy, whereas with the one tap, it's just obvious that if you're putting in a price and it's above or below, then it will define whether that's a sell. It obviously give you here, like, stop distance, balance, risk to reward, actual risk, once you put all the details in. But anyway, the checklist and the position calculator, the exit checklist, they're all available. As I said last week, you just go to yentrades.com, put your email address in, and you can download, you can add this to your home screen. You can, bookmark it to your browser, and yeah, it's there, it's free. So anyway, I hope this has been helpful as always. You can find me on Instagram, same handle, Instagram, TikTok, Threads, and I have my Telegram channel, which you can also join. I kind of sometimes share a little bit more detail in there as well. So have a great week trading, and yeah, stay safe.